So look, I think well, thanks for doing this. First of all, there's a lot of people who are sort of advocating for it online. Um, I think that most importantly, first, what people would like to know is about Open. Sort of how did it all started for you in all of?
Well, I've followed Open for a while since they IPO'd, like through their D-SPAC in 21 or whatever it was, and I admired Keith Rabois, who was like the guy who wrote the original business plan for it, like more than 10 years ago. And so I kind of expected them to do great things, and they never did as a public company. And then I was on a podcast in 2022 when the whole tech landscape was melting down. And the guys on the Compound and Friends asked me, okay, like tech's in the doghouse right now, but like, do you think it'll, well, A, will it ever come back? And of course, everything always comes back. And so I was like, yeah, of course, crypto will come back and tech will come back. And then they were like, okay, well, name names, tell us about, tell us one, you can give us one stock that you think will come back from the dead and surprise people. And so I gave them two. One was Carvana and one was Opendoor. And that was in June of 22. So I think Carvana then was 20 bucks and Opendoor was probably, I don't know, six bucks, probably similar to where it is now. And then over the next 6 months, my predictions look terrible because tech continued to like roll over and go down. And so eventually, Carvana got as low as $3.50 in December of 22, and then finally like made the turn and started to come back. And yet Open Door never did. Open Door, like I kept waiting. I was like on the podcast, I'm like, these two businesses are exactly the same. They needed a lot of debt to execute their business strategy. They don't, one starts by selling cars, but then bundles in other
Yeah.
services with it. And one's going after houses. They're both trying to disrupt traditional businesses, use car dealerships and real estate agents. And eventually, like they're going to be able to resize, rationalize their headcount to their, new environment with the higher interest rates, and then move forward. And Carvana did, and like it just kept going and going, and eventually became this hundred bagger type of company. I think from the bottom to their peak, it was like 118x
Yeah.
from 350. So and yet Open Door never did, and so. I hung on for a while, and then probably like more than a year ago, I finally sold out of it. I mean, it became like a smaller and smaller part of my overall portfolio, and then it's like one day you come in and you look at it and you're like, oh man, like obviously I really screwed this up, and I got it wrong. The new CEO obviously hasn't turned things around, and so I just sold out of it. But then when earlier this year, I decided to kind of refocus my hedge fund on trying to find like more Carvanas because I did eventually like I did get back into Carvana in starting in May 23 when it was like 15 bucks and kind of wrote it up and banged the drum for it, but honestly like nobody cared. Everybody just wanted to invest in the Mag 7 in 23 and 24. And I mean, I can't really blame them because like,
Yeah.
through the whole downturn, 21, 22, 23, and 24, like if you had just only been invested in the Mag 7, you did great. Whereas like all these smaller growthy companies like Open Door or Beyond Meat or Carvana, like, there's like nobody had any interest. The Russell 2000 was like doing terribly. And so it made sense. But I decided when earlier this year when I decided I'm going to focus in on these hundred bagger opportunities. Like the first two that I came up with were Iron and Cypher, which are these like Bitcoin miners turning into AI HPC. And I noticed like immediately people started, were much more interested than 2 years ago when I started talking about Carvana. And they would say things like, oh, I missed Carvana. Now, like, oh, I want to find the next Carvana. Like that was like, I'm bored of the Mag 7, things like this. And so, and then some people started in the summer, like this is like June, July, would say, "Hey, I remember you were on that podcast, 3 years ago, and you mentioned Open Door. What do you think of Open Door? Do you think Open Door could actually turn things around?" And I hadn't looked at them in probably a year. I had no idea like how they were doing, and so I began to kind of dig into it, and it didn't take too long, and before I felt like, oh well, actually, this could be a turnaround candidate, and unlike Carvana, I missed the first move from 350 to $15. I mean, so that's what, 5x, 500% I missed. And I know that like a lot of these Walking Dead stocks, when they come back to life, it's that first move that it can be really violent. And so you always have to balance, like, are you catching a falling knife like I was in June 22? And like the thing just keeps going down for another 75% over the next 6 months. I mean, you look pretty stupid holding it. But if you miss it, then you miss that 500% move from the bottom. And so I just felt like there were a bunch of things for Open Door that were in its favor, and that like it could make the turn. And obviously, like you knew that the macro was going to play in their favor because eventually the Fed was going to cut rates. Although I didn't know whether it would be in July or in September or October, December, whatever. I felt like the U.S. economy was slowing down, and the Fed would eventually have to cut, and that would be a tailwind for Open Door. So that's it's. Then I just decided to write up the analysis and be a little bit more specific compared to what I did, like whenever that was, like 2 years ago with Carvana. I wasn't trying to say at the beginning, hey, I believe Carvana is a 100x opportunity. I didn't say that, and so I felt like this time, like, hey, like I'm gonna go for broke, and why not? And just sort of like, go public and say that I believe in this company and I think it's going to eventually, like in a few years, like make it to $82. And so I did, people say like, where'd you come up with that number? I mean, I did like a similar kind of analysis to like looking at like the path that Carvana had gone on and what their enterprise value to revenue multiple, how it had been high before and then shrunk and then came back. And if I did the same kind of analysis with Open Door, assuming that they got back to profitability and growth, then I said like in 3 years' time, by 2028, like this could be an $82 stock. And at the time, like I built my position in the 70 cents range, and when I announced it in mid-July, it was I think it was around 88 cents.
Right. And were you surprised by the amount of attention that it got around Open Door?
I was, yeah. I mean, because I had just announced like Iron and Cypher, and that got some attention, but I mean, nothing crazy. And like you could tell, like right away with Open Door, like there was like a much bigger interest in it. And it's really hard to put your finger on it. Why? It's like, I guess it's like predicting like why some actress like becomes popular and then another one who's maybe just as talented, but it's something has a different story or has a different look, someone else
Do you
doesn't
think it's
become
because the real estate market is something people understand more than crypto miners?
maybe a little bit more accessible. Maybe more familiarity with the brand. Although it was surprising to me because Open Door is only available in the US, right?
Yeah, yeah,
And
yeah,
and
absolutely.
yet, like the attention that I was getting from people tweeting at me, whatever. I mean, I would guess like 70% of the people that were buying Open, like right from the beginning, were from outside the US.
Yeah,
So
it's same with Beyond Meat.
and they were saying to me things like, "Oh, we need Open Door here in our country, in like in Netherlands, UK, whatever, wherever.
Do you think that it's a frustration with like real estate agents and the way the process is done? Because you kind of see that on all the moves, Beyond Meat, Open, GameStop, like against short sellers, against like big kind of old industries.
Yeah, I think that all like there's so like a confluence of factors. Like there's the frustration that people have with housing and globally. The cost of housing globally is too high, and everybody feels it, especially young people. So you had people like that. You had like a big brand. You had the fact that there was like a high short interest in it. I mean, I forget what it was, but like over 20% of the float was short. The comparison with Carvana, people sort of like had this FOMO.
But why do you think why specifically Open Door interested you in that much? I mean, the real estate market, particularly transactions, like historically hasn't been amazing for anyone.
No, but I mean, the playbook is there with like Carvana like was coming into it's similar to Uber, similar to Airbnb, similar to Amazon. You're like coming into some highly fractionalized space, very dispersed, like no dominant player.
Yeah, but I
It's
mean,
like
you had companies that tried it before, like Redfin, Zillow, that tried to sort of digitize the space a bit, and
Well, yeah, but they came after Open Door. I mean, Open Door really pioneered this for real estate. And then before the interest rate hike, when it was still ZIRP, before, like you had Redfin and you had Zillow copycatting. But those businesses were built on a different models, like as their core business. So Redfin was a brokerage. Zillow was a basically selling ads on their website basically, and a kind of a lead gen referral to real estate agents. And so
yeah, that's
when
how
the
it
times
started. And after at some point, I think they started buying the actual houses and like doing a fund and
Right. No, exactly. But like, and then when times got tough, they immediately like said, okay, we're done with iBuying. No more. We're going back to our
yeah.
core business where we actually make money. And so, but Open Door didn't have that luxury. Like, there was nothing to go back to. They had to like burn the boats. So I think, I mean, the opportunity, originally, like the vision was like we're going to be the Amazon of real estate, whatever that means, right? Like it's like
Mhm.
you don't need a real estate agent. You just like type in your address. Open Door makes you an offer. If you agree, like you close in like 3 days or, eventually like one day. I mean, once we have like tokenization, I mean, instant settlement. I mean, that's sort of like the vision. And people are like, oh, way out. Like, screw, I hate my real estate agent. Why am I paying all this money to the real estate agent? It's like, yeah, just like, nobody liked calling up the taxi companies before. And it's like everybody now wants to live in their phones and kind of have no human contact and just order up their Ubers and stuff like this. So I think, that was like that was the vision. And I guess part of my, another feather like in the story, another like if you had asked me before I tweeted about them, like, okay, what's the best case scenario, Eric? I would have said like, well, maybe like down the road, if I can get some momentum and I can sort of put some pressure on this company to make changes, it would be great if we could get this guy Keith Rabois to come back to the company because obviously, like Alex Karp at Palantir or Elon Musk. I mean, those are the two, like, I don't know, the closest that we have today to Steve Jobs in terms of like the pixie dust, the magic of like the cult of personality around them, and which results in higher multiples for their companies. And so, drive some people nuts, but it's sort of irrefutable
No, no,
that
absolutely. I think that Keith is probably less polarizing than those guys, but
well, in some ways, he takes very strong positions, including lots of political positions that rub people, who have the other political views the wrong way. But I thought like if he can be convinced to come back and people see this as like a true, rebirth of this company, getting back to its founder roots, maybe this could be, could get like some pixie dust
yeah.
multiples to it, and there was an AI, part of the story as well, and so forth. So anyway, those were all the. So but it happened much faster than I expected.
Yeah, it was kind of the same with Beyond Meat, to be honest. Like probably without the part of actually someone coming in to run it well, but
Right. Well,
which
I
is the
think
important part.
I remember like one of the things that like amazed me both about Open Door and then it was surpassed by Beyond Meat. And what you did was about 10 days after I first tweeted about it. The stock had risen from, whatever, 88 cents to 10 days later, it hit $5, or almost $5 or something. And it traded 2 billion shares, which was 3x the float in one day. And it froze the Nasdaq circuits or whatever, like it got halted for volatility or whatever they call it, and for 15 minutes. And people couldn't believe, like, oh, who's ever heard of like a stock that trades 3x its float in one day? Oh, and then of course, like, oh, the meme stocks are back, and this is just another dumb meme stock. But then when I think on the biggest day for Beyond Meat, you guys traded like 10x your float.
Yeah,
So
yeah,
sort of
that was about it.
put us to shame.
That was about it. Yeah, it happened extremely quickly. But I remember similarly to you, like for the first 2 days when I was down, so sort of like 50% on Beyond Meat. Like everyone was kind of talking it up. It didn't feel like it was a huge success in the first couple of days. But it was interesting. Well, did you? A lot of people have asked this on X for some reason in a maniacal sort of almost way. Have you looked at Beyond Meat in any way?
I've looked at it, yes. And what I would say is like people, a lot of times people say, "Oh, what do you think, Eric? What do you look for in terms of like coming up with these like 100 baggers ideas?" And I would say like there's no at least to my eyes, there's not a common list of like these 7 things. If I find a company with these 7 traits, that's a sure thing. Like it's not the case, because I just find like there's always differences between each company that does
Yeah.
have this like revival. And so instead, like what I see is like there are some if you found like 10 companies that have made like these major upswings and you kind of wrote out all the things that were present in each one, like there would be a bunch of technical factors. There's it's probably some fundamental company turnaround factors. There's things like insider buying, which Carvana had a lot of, and then Open Door had just the opposite. It had complete like insider selling, constant selling. There was
Mhm.
no buying at all. So and other things as well. So if you wrote everything out on a list, like a spreadsheet, you probably have a list of like 40 things that are present in all of these cases. And then if you said, okay, which of these 40 traits, are present each and every time, probably it's only like 40% of the things. And so what I tend to do is I try, I look for like, okay, are there enough of these traits present? Like sort of a minimum threshold, and then nothing's ever for sure. Like that, you never know. I don't think anybody can convincingly say like, oh yeah, on day one,
Yeah,
I
for
know for
sure.
sure that this is going to be 100x return. But like maybe it's got a chance, and maybe it's got like if you start tweeting about it or call attention to it, maybe like people get interested in, and then it's like the snowball is sort of starting to roll down the hill. It has a chance to get bigger. And so like, I guess what I would say about, the what, so like, what are the common out? I'll say like, there's some common things I would
Mhm.
say between like Open Door and Beyond Meat, and then there are some differences. So the common things are, like, uh, people have given up on both companies or had given up
Yeah,
on both companies.
absolutely.
Like it's sort of like okay, these companies. There are some companies that it's almost like they don't exist anymore. Like Wall Street stops covering them. They
Yeah,
will sort of walk away
yeah, and
from
they're
them.
just
They say,
left to
no,
die.
yeah, there's and people stop paying attention, and so the sentiment is exhausted. Like if you bring their names up, it's extreme like negativity. It was the same with Carvana. So, and then, but, both have like large potential total addressable markets. If they get their act together, you can
Yeah,
still say like that's a big market that they could sell into, and you could say like, okay, well they've got a decent name within that industry. Like everybody who knew cars, selling cars. Like everyone knew Carvana. Like maybe they had a negative view. Oh, those they were run by idiots because they let their stock drop from $400 to $3. But yeah, I've heard of Carvana. I mean, a lot of people had positive customer experiences with Carvana. People knew Open Door. People know Beyond Meat. Um, they also like obviously all three of those companies like they got in they sort of overbuilt. Like they expected like life to continue
Yeah,
and
yeah, yeah.
up and to the right, and then so they were too big, they had too many people, or too much debt or whatever, and now they're sort of like adjusting to kind of like a new reality. And that's part of the, to find a hundred bagger, you've got to find a company that has gone down. And so all of these companies, like they got crunched in terms of the value of their equity prices, because there was so much, negativity and concern that, can they be a going concern and all this kind of stuff. Um, so those are the commonalities. I guess like the concern I have about Beyond Meat. So I haven't, I don't own it. And I'm not closing the door on owning it. But I'll tell you like why I don't own it. Like the concerns would be about, um, Open Door was just on the verge of profitability. And so they had kind of like indicated that their August quarter was going to be the first time that they were EBITDA adjusted positive in 3 years. And Open Door also Carvana also kind of hit profitability kind of soon
Yeah.
after they bought. And a lot of people said, "Oh, well, that's just like they played some games, some accounting games, and all this kind of stuff." But then eventually, Carvana showed that they got to, self-sustaining, like, constant profitability. And Open Door hasn't got there yet. But, now obviously they have a new management team, a new philosophy. They're reducing headcount, they're using AI, and they're saying that they're going to be net income profitable by the end of 2026. Um, and they are also like both Carvana and Open Door like have sort of indicated that, or they indicated early that they were going to be growing their top line as well. So they're growing top line, growing bottom line in a kind of a regular way. Like my concerns are, at least when I look in a backwards way, like I haven't
Yeah, it's
dove.
absolutely not there. Like
It's
there's no
beyond
question.
just sort of shrinking, both revenues
It's
and,
absolutely that. And actually, I think that an interesting question for you is, do you think that these companies should be public or they would actually fare better in private markets at the moment?
well, I mean, I guess it all depends. Like with Open Door, we found out after the fact that the guy who's now the CEO, Kaz, he was the COO of Shopify. He was actually kicking the tires on potentially taking private Open Door in February. I didn't know that until just, Keith mentioned it on a podcast recently. And so that so I guess like from his perspective, and I guess Keith would have been involved had that been the case. So from their perspective, probably that the board at the time would have said yes,
Oh
because
yeah, because like if you look at it, public companies have to do sort of short term and long term at the same time. In Beyond Meat's case, like they've made it very clear that they don't care about the short term. They've used the momentum to raise cash and kind of extend their runway by 2, 3, 4 years and to sort of go into profitability, but they're behaving very much still like a startup, not like a public company, with the so
right. So
it's why I ask, like, because you see, even now in private markets, startups sort of getting even higher valuations. It's less liquid for investors, obviously, but for the companies itself.
yeah, so like from my perspective, like I'm glad I was able to get involved and start banging the drum at 80 cents and buy in at 70 cents. And then, even though the stock recently has been sort of got as high as 11, I think it was like below $7 today in the sixes. I mean, obviously it's still up a lot from where I got in on my cost basis. And, so it's been a great, so if you say like, should these companies be public? Like, I'm glad I found this like broken down company and was able to make some money from it. From Kaz's perspective, from Keith's perspective, they probably would have ended up owning much more of the business had they been able to take the company private, in February or whenever in the spring or something like that. So I don't know. Like I think it's but if your question is like, is it possible for these companies to turn themselves around in public in the light of day? I definitely think it is. I
Yeah,
think like
I
most,
just wonder if it's more complicated for them to do in public than to do it in the private markets, because you are sort of focused to give guidance, short-term indications. There's a lot of things you have to think about. Plus, it has an actual cost to be public at those rates.
yeah, but I just think like most management teams are lazy. And
That is also true.
they're not good communicators, and they use those kinds of like reasons that you just mentioned as excuses, and like if you want to have the pressure off, why wouldn't you want to
Well,
be
you
private?
see companies that don't want to go public now, right? Like there's startups valued in the tens of billions of dollars that just stay private.
Well, yeah, and I think that's ridiculous too, by the way. I mean, I think I mean, I grew up in the dot-com era when like companies were like going public when they had no revenues. Like they just had a business, they had a website and a business plan. They were still going public, and
Yeah.
to be honest, like as a public markets investor, I mean, I much prefer that. And then all of a sudden, Facebook came along and all the enablers for Facebook, like Mark Andreessen said, "Oh yeah, founder led, stay private forever." But I think it breeds a complacency. I think there's a discipline for all these management teams who, when they go public, like that, it's just like somebody who works out and who's like more athletic versus somebody who doesn't care and like lets himself go. Like I think it's like better. Like I think you can definitely be public, be accountable, um, have to communicate and defend like your actions every quarter to your investors, and turn your company around. Like it's very possible. It's just that people don't like to have to be accountable every quarter and don't like to have to be criticized when their stock, when they have a bad quarter, which is their fault, and they have to report it to their investors.
Yeah, I mean, for sure that takes a lot of strain on, and not everyone can handle a lot of liquidity either, I think. But I'm curious when before Open, you said that you mentioned Iron and Cypher. Like I remember at the time, sort of Iron was this company people hadn't really heard of, and it wasn't clear at all that Iron would sort of go on the run that it had compared to Riot, Mara, Bitfarms, or a lot of the Bitcoin miners that were CleanSpark that were all sort of going after this AI boom at the end. Why Iron, you think that actually was the one to sort of get those deals? What made it different?
What made it different to me was that they had the biggest backlog of gigawatts that were within the next 18 months going to be energized. So my thesis with them, and I wasn't the only one, there were other people out there in Twitter. I mean, there was a fervent community of people that love Iron and Cypher and online, who I learned a lot from, just kind of sitting in and watching their tweets and listening in on their spaces and stuff. But you're right, like some of them had been in the stocks for like 2 years.
Yeah,
And so,
absolutely.
and like they had been ignored. So, whether it was dumb luck or whatever, I mean, when I jumped in, I got into iron in the nines, and Cypher was in the threes, high threes. Um, this was like I don't know, May or beginning of June or something. My thesis was okay, like these gigawatts that each has, and they both had 3 gigawatts each that were going to be turned on and energized in terms of AI data centers that they built. And in the case of Iron, it was going to be within the next 12 months, all the full 3 gigawatts would be lit. And Cypher was like within the next 18 months. And the other players in the space, like I don't know, Core Scientific had done a big deal back then with CoreWeave. They really only had like 200 megawatts in the near-term pipeline, I would say. Like they all have long-term pipelines, but like in terms of like the next 12, 18 months, like what's going to come online, like it was much smaller in scale. And so my assumption was we're not going to stop typing into
Yeah.
ChatGPT any less going forward. Like the demand for AI data centers is just going to keep going up, and there's not enough to meet the demand, and therefore, like you know, you talk about like finding an undervalued asset. Like I just felt like, okay, these guys, Iron and Cypher, are being thought of as, you know, Bitcoin miners, and everybody, you know, people at the time like had very negative views on Bitcoin miners like Riot and Mara. Oh, these guys, you know, they pay themselves excessive compensation. The miners never do as well as the underlying as Bitcoin itself.
Yeah.
Ethereum at the time was like close to like, you know, had done nothing like since 2021. So
Yeah.
it's like,
You can arguably say it still hasn't done nothing
you're
as
right, yeah. It sort of round tripped. It went on a run and then gave it all back.
yeah.
But uh my thought was like, okay, well, I don't know when, but like sometime between, you know, and yet there have been these big announcements like Oracle had announced like Project Stargate with SoftBank and OpenAI,
Yeah.
and there was going to they'd have to fulfill like a lot of energy to kind of meet their promises. And so my assumption was that like, okay, before the end of the year, I don't
Mhm.
know when, maybe it'll be like December, but like they're going to have to do like these bigger players, like the big hyperscalers are going to have to start doing deals with. And who are they going to do deals with? They're going to do deals with these companies like Iron and Cypher probably will be top of the list because they've got the gigawatts. And so that was my, you know, thesis with them. And so you know, I'd also listened to this guy. There was a guy, Mike Alfred, on
Yeah.
Twitter.
Yeah. Of course.
He's on you know, he does spaces all the time.
Yeah.
And you know, he one of the things that like really caught my interest was that I remember listening to him he does these like weekend spaces. So I was like in my backyard in May. I was listening to him talk, and he's on the board of Iron. And at the time Iron was like a 2 billion market cap company or something like that. And you know, he like talks openly about it. He's not like some of these people that are like, oh,
Do
I'm
you
on the
think that
board,
that
therefore.
was the difference? Because sort of if you see like if you look at Riot, well, probably not Mara, they were more into Bitcoin mining, but even Core Scientific and all of those companies, they all had a lot of power. And even if you look at it today, like the Iron deal happened, all of that power got sort of used up, and you don't see the other Bitcoin miners who have access to that power moving in any way. They're sort of still all almost at the same place as when you bought into Iron and Cypher.
Yes, yeah. Well, I would argue like I don't think I mean they have the potential to develop those power like
Yeah.
those long-term roadmaps, but it's sort of the difference between the 10-year plan and like the 12-month plan, right? And what's going to
Well,
come
because
on.
on the other hand, you have like Nebius who's arguing that all of those guys are sort of only subcontractors and they don't actually have the software running into this and kind of advocating for all of that.
Yeah, but Nebius has probably been the biggest deal since I took that initial position. And you know, it's their stock has done great. I don't own it, but like look at that deal that vaulted them. Like it's a 1 gigawatt deal with Microsoft for one data center. And yet it's like I think it's like an $18 billion revenue deal, 3 billion a year for 6 years or something.
But
And it does.
if you look at the numbers that are actually on the financing of those deals, like it's not exponentially high internal rates of returns on those. And
No, and there's a lot of complexity to those deals. And like I was talking to somebody who's with another company that is in the same space yesterday, and he was saying, you know, oh, you should really look at the deal for the TerraWolf did recently. Like they had a big deal, but there's a lot of conditional conditionalities, I guess you would say, like where TerraWolf took on some extra risk in those deals. And if you know if something this and this happens, it's on TerraWolf. It's not on Google or it's
yeah,
not on.
yeah.
And
Well,
so
and do you think that that's part of it, that those hyperscalers, because it's very much spinned and presented as if like those miners have the only resource that they can get, but is it not just hyperscalers sort of pushing down what they don't want to do on subcontractors for who are making not that much high of a margin?
Well, I mean, I think it's just also just the realities that you know, these guys, all these hyperscalers, every quarter they're saying that we're upping our CapEx budget by another 10 billion. So we did
Yeah.
60 billion last quarter, and now we're guiding to 70 billion the current quarter and stuff like this. Well, you can anybody can spend the money whenever they can announce we're going to spend an extra 10 billion next quarter, but to actually then go out, find the real estate, buy the
Yeah, but
land.
I guess that's the key thing because it really trades sort of on multiples as of like AI, data centers, and all of that. But it's really a real estate deal where you have like the power, you have the GPUs, they're building things, but they're powering infrastructure because Nebius is a bit different. Like they have software to run of this. CoreWeave is a bit different, but in this case. And all of those Bitcoin miners, they're kind of pivoting to sell assets that they ended up owning that they bought for something else that just got some value and they're flipping them for those deals.
Well, but I mean, look at CoreWeave though. Like CoreWeave positioned themselves as, oh, we're not going to own the real estate. We're not going to be this guy who's like in the trenches owning these hard assets. We're software. We therefore we deserve a higher multiple because we're like in this in between land between the hyperscalers and between like the core scientifics of the world. And therefore you should pay us more because we're so smart and we write fancy software and all this kind of stuff. And and therefore we deserve a higher multiple. And yet now they're like scrambling and their stock is like crashing, I would argue, because they don't own the real estate. So like they thought it was a plus, not owning
Yeah.
the real estate. And then Iron is really trying to disrupt them from underneath by saying like we bought these certain land in West Texas and in Canada, like British Columbia and all these places. We've negotiated these fixed costs, power deals with the local power authority. And now we're building the data centers, we're buying the chips directly from NVIDIA. So we're trying to, core we from underneath of them. And so I
And
think
where
that
do
was
you think today that there's more opportunity at the stock price is trading sort of now or in the past time, sort of to go after the Bitcoin miners that have the assets but have shown that they haven't been able to utilize them in any way yet, and we're not able to get a deal and don't have those premiums, or to go for the companies that already have the deals in place but are sort of at a low IRR return going forward? What do you think is the best
I
there?
I believe like it's better to stay with the winners, like an Iron and a Cypher, than these, you know,
But do you think
the
there's
Mar.
more upside for it to go?
Oh yeah, no, I think they're both 100 baggers. So ultimately, I think like Iron's a $900 stock, and Cypher's a whatever $300 stock or something like that. So now that's in like 3 to 5 years, and that's like so that's assuming like obviously they're going to deliver their near-term backlog. They're going to have a longer-term backlog that they start delivering. I think
And
it's
then do
not
you
going to
think
be
they just go and
nice.
acquire the companies that are sitting on the power assets that they were not able
Yeah,
to use?
possibly, but yeah, I do think there's a quality difference in the management teams. I mean, I do think like
Yeah, that's definitely a big
I,
factor.
I mean, Iron and I would you wouldn't have assumed that Iron would be as successful as they are.
Yeah,
Like it's
absolutely not. A friend of mine, in fact, told me about Iron at the same time that you bought it. I said, well, Riot is more underpriced. Why would you buy Iron? Riot is
right.
still at the same price it was then.
Well, and Iron, it's like two brothers from Australia. They're ex-bankers, ex-investment bankers. Like, what the hell do investment bankers know about
Well, yeah, well, you kind of see that it's
Bitcoin mining?
what was working, right? Like CoreWeave is also not kind of people from the trade.
Yeah. So, but like I remember, like after ChatGPT 3 came out in like November 22, and then, it took probably 5 or 6 months before people connected the dots and they saw NVIDIA. I don't think NVIDIA really took off until like May of 23, so like almost 6 months later they had these like blockbuster earnings. And so then the stock, ripped and I forget how much it increased, but like it was a huge jump. But I remember like if you turned on business TV like after that summer, whatever, everybody like the dominant view, like what you'd hear on like the talking heads was like, oh, now you got to get into AMD. Now, forget Nvidia. They had the pop. Just stick with
Yeah,
A,
I remember that.
now you got to play for like the comeback story. Number two, number three to come back. I think that's a knee-jerk response for a lot of people in a lot of markets. And I see this myself. Like I don't know if you get this with Beyond, but like with Open Door, Iron, Cipher. Like, I remember like Open Door goes from like 80 cents to $2. Oh, I missed it. I missed it,
Yeah,
Eric.
yeah.
Yeah. Oh, God. Tell me when you have your next 100 bagger. I'll get into that one, okay? Yeah, I missed it. I was like, you missed it. You
And
realize
then
I'm
when
saying,
it goes down 20% before going up, we're like, ah, it's a scam. And then it goes back up and it said, ah, this
right?
is working. Yeah, you
Oh, I
kind of
missed it
lose
again. I missed it again when it
confidence.
goes back up.
That's really
So
crazy.
like,
Like people wish they bought something cheap when it's high, and when it's low, no one's buying. It's really human psychology. That's absolutely amazing. And the other thing that I've always found interesting is that you can have a stock that's sort of like $100 trading for 50 and no one's buying it. And then like there's a lot of them actually in the market. So, but it's quite interesting. But what do
but
you think about all of the meltdown happening in all of the stocks like the past 3, 4 weeks? You kind of see all risk stocks going down. Crypto is kind of phasing out, and pretty much any stock that has some risk associated it is being de-risked at the moment.
well, it does remind me of the I don't know if you were around and trading then, but like Q4 of 2018 was when like Jay Powell first like started talking tough about raising rates, and like all tech stocks just like took a dive for like September, October, November, in December, I think. Things just like went straight down. And then obviously like latter half of 21 and then into 22 was just like, a terrible time. And I tend to be like, I think in order to be a guy that looks for 100 baggers, like it's sort of like the exact opposite of the short seller. I think like whenever I talk to short sellers, they seem like very unhappy people in life in
Yeah.
general. Because I think it's because their whole framework, their whole worldview is like to look for everything that can go wrong and who's trying to screw you and who's lying and all this kind of stuff. That works for short sellers. I'm not a good short seller, but like I tend to be like the opposite and like what can go right, what's the blue sky scenario, and what can all work out. So I that makes me like more at risk of like not seeing some macro event that comes across and like smacks like some individual open door story or something. And so, I try to learn as an investor and like not repeat the same mistakes. So I don't want to, I've wondered in the last couple of weeks, like, oh, am I missing something again? And is there like some big drawdown about to happen? But I don't think so. Like we're sitting here like at the beginning of a rate cutting cycle, not a rate hiking cycle.
Yeah.
And like there's been a pullback, which is, fine, but like like how many pullbacks have we seen in the last, I don't know, 5 to 10 years where
I think
it
even in the
was
last year. It's not the
yeah,
first one even this year.
where you were like rewarded if you bought the dip and all this kind of stuff. And even in, like a case like Open Door, I mean, obviously it's not
But
11.
how do you think? Because that's interesting. You must be getting all of those that inbound messages as well from people kind of panicking all around whenever something goes down or something goes up. What do you think is important for like people, especially retail investors, to sort of do in those moments when?
Well,
Because whenever someone messages me about that, and there's some extreme cases of people being distraught, I always try and tell them like if you look at a stock hour by hour, it's probably wrong already. Like you should just not have the app even on your phone, maybe if you're that anxious.
right. Yeah, no, are your DMs open on X?
Yes,
Like do you
yes.
Yeah, so mine are too. So I must get like 30 a day. And you're right. Like I remember because like I remember Open Door, it goes from like 80 cents to $5, and then it got as low as like $1.65 or something like that. And like at a dollar, anything like below $2, I was like getting death threats. I was getting like,
Yeah,
I mortgaged my house, and now I'm so underwater. Tweet something. Like I always get these people.
yeah.
Tweet
No,
something,
I
Eric.
still get that
Make
every
it
day. Like,
stop.
yeah,
Do something. Get the
yeah.
stock price up. Would you? Come on. Like, what are you doing over there? And then the stock goes up, and you hear nothing, and it's quiet. Like everyone, it's only like,
You
and
did
then
something. Yeah,
the
yeah.
first buck or two down, like, oh my God, like make it stop. I got in at the top, and like so. What I mean, I have been trying to, and I didn't do this by, with like a big master plan, but I've been making these videos in front of Drake's house for like almost 100 days now. I'm like on day
Yeah, I've
93
seen
now.
those actually. Yeah.
And I originally I did it because my 16-year-old son said, "Oh, this is a way you can go viral. If you like, it's a trend on TikTok. If you make a video every day, with some like, and it's open-ended, like nobody knows when you're going to stop, and you try to, you're trying to accomplish something. So you should, Dad, you should try to get Drake to buy some Open Door stock. So I mean, that's how it started. But now, I don't go in front of his house every day. I go in the neighborhood and I do these like walk and talks and I talk about Open Door like maybe one day I'm talking about how Open Door is doing or how I talk about like some other stock that I'm in like Better or something and I've tried to use those as a way of like just communicating to retail investors in general because that's a lot of my followers are
Yeah.
retail and I try to I guess provide some perspective. And I talk about, Carvana and I talk about like the drawdowns that experienced in Carvana. And like I made lots of mistakes with Carvana. Like I didn't get in early enough. I didn't when I did get in, I was basically in for the first 10x from like $15 to like $150. But after that, I believed at $150 when I sold most of my holdings. I believed it was going to go back to 400 and beyond, but it was very volatile. It had huge drawdowns. And actually, I was looking at it today, Carvana, from the time like it hit the bottom till when it hit like $413, including like most recently, it's had 11 drawdowns of like between like 13% to like 60%. So 11 drawdowns, and so th those are tough to ride through, obviously. And so at 150, I sold most of my Carvana, and I thought to myself, like, oh, I'm so smart because I got into Carvana earlier. I'll just like trade it, So I'll buy it low at like 130, and I'll ride it to 200, and then I'll sell it, and then I'll buy it back at 150, and I'll ride it. But you miss,
Yeah, I
at
think
least
that
for me.
that almost ends up never working in the long term.
Never worked. So I'm sure I lost money between 150 and 400 on Carvana. So I said to myself, like when I started Iron and Cipher
So
and,
what do
and
you think
Open,
like people should do? Because it's a question both of us are getting, I think, every day in the DMs or somewhere. Like, how should people actually handle their psychology when they make an investment? Because you see probably all of those messages, like people saying, like, I put all of my life savings into like one stock, and then it like fell 20%, and I'm about to like jump off a roof, or like because people are very getting emotional about their investments. Like I always try to explain them that they shouldn't be doing that in the first place. Like even if they think that it's going to go up, like and think about the downside. But what I find is like on platforms, if I tweet on X, for example, I don't know if it's the same for you, something like, this is a good thing. It gets twice the amount of reach than if you tweet like be cautious and kind of like manage risk.
Yeah, that's true. I mean, again, like it's all about human psychology, I think, about like why some tweets do better than others. Um, I mean, I just say that to people like I would suggest like buying a big amount of equity, like not going full. I get so many people say, "Oh, I'm full port open, like my full portfolio," and I was like, I agree with you. I don't think that's a good idea. But like, do as much. I mean, you want to put a meaningful amount behind these ideas. Like, if you're right about Open Door or Beyond Meat or whatever you think, like you don't just want to put $500 in it. Like if something's going to 100x, I mean, that's not going to change your life. Like it has to be a meaningful amount of money for you anyway. Like that, if it 100x's, like that's going to like make a big difference. And because this is about it's like slugging percentage versus batting average, right? Like it's sort of like it's like the SoftBank Vision Fund kind of model. Like if you're right, like if you're even if you're only right one time out of 10 times, if you do find a 100x opportunity and everything else goes to zero,
Yeah,
you're
I think
still
the
gonna
key here is that you need to be able to do it 10 times. Like if you do it just once and you're wrong, then you're kind of screwed.
right. So like I think like buy a big pile of equity in whatever the stock is, try to get in as early as you can, and then don't touch it. And in some cases, like with Carvana, like I wish I had bought some long dated. out of the money options on
Yeah.
Carvana. But like I think like I noticed like a lot of people say, "Oh, but I bought some options for next month or next week or January. It's like 2 months away." And now I'm nervous because I for open like I bought the $14 January options or something and it opens at like $6 or whatever it is. And yeah, like that's where you can really screw yourself is if
Yeah,
you put
options are
your money in
extremely
options.
risky, especially short-term options. I think people just don't understand how options work even often. Like the
Well, yeah, and we haven't even talked about like zero DTE and all this kind of stuff, like so that's where you can really light a bunch of money in your portfolio on fire as if it's like two short-term options
I hear
focused.
that. Do you think people should be trading on their phones or like just not have the app?
Uh, I don't know. I mean, I'm addicted to checking like all day, every, 7 or 8 times an hour. So I don't fault people for having the apps on their phones to check it, but trading, yeah, for sure. I mean, they shouldn't be trading like every hour, every day or whatever. I mean,
Yeah, that
build your thesis
definitely
and stick with it.
definitely better be cautious with all of this, and because people are taking irrational amounts of risk, like it's kind of crossing into gambling in many cases. So what do you think about the crypto space at the moment?
So I'm bullish, longer term, and I have a new crypto treasury company that I'm launching, like if all goes well, like next month in December, called EMJX. So it's going to be a multi-asset treasury. So everybody else,
Okay.
like most people, they pick like Ethereum
Yeah,
or Bitcoin or whatever. I know you're in ETHZilla.
yeah.
And they're doing like a more tokenization play, I
We're
guess.
getting completely screwed by Zilla management at the moment, like as we speak. Like it's
So what's different about mine is it's going to be multi-asset, so Bitcoin, Ethereum, and what I call like Carvana coins. So these are would be like probably 5 to 10% of the treasury only, but in specific crypto projects that m most people haven't heard of. They're really small, but hopefully like they're undervalued and they could have this 100x potential. And then the second thing that's going to be different is that we use AI models that we developed internally at my hedge fund in order to hedge the value of the treasury over time. So I think I look at a MicroStrategy and Bitmine Inversion or whatever they're called, like Tom Lee's company, any of them. And they're sort of like buoys that float on the water, and they're a pure beta play. And so Bitcoin is up and they're up more than Bitcoin. Bitcoin is down, they're down more than Bitcoin. So like this year, I think MicroStrategy is down like 34% on year to date, whereas Bitcoin is like, I don't know, -2% on the year. And so, like, and it's interesting, like when you see Michael Saylor go on TV, he just, oh, what are you going to do about it? Well, in 10 years, it's going to work out and it's going to be great. Well, yeah, that's great. But like,
well, I think all of those guys are just all saying the same thing every time. Like there's no change in content if it goes up or it goes down. But
no, like
they
if
kind
you,
of have to. Like that's they're like an idle part of.
you just talk about like the long-term potential of Ethereum or just the long-term potential of Bitcoin. And so, with our tr hedging models, though, we've,
So is it going to be more like a crypto treasury since it's actively traded, or more like a crypto hedge fund? What do you think is the most accurate?
I guess it would be more similar to a crypto hedge fund, in the sense of like the idea is that like we go up as much, if not more, in the good times, and we retain the value of the treasury in the down times. So like
And
that's
is
where
the idea then that you can kind of swing trade the volatility into the value of the stock? Like if it trades at a premium, issue shares, buy more crypto, do buybacks, or just
Yeah, exactly. Well, yeah, exactly. The other criticism I'd have of these Gen 1 treasuries is that, their only lever that they can pull to grow is to further dilute their shareholders by doing more equity raises or convertible notes or something. And whereas, if what we expect to do is like we'll have, if we raise $100 million, let's say some a good chunk of that is going to go towards buying, Bitcoin and Ethereum and whatever the Carvana coins are. But then we're going to hold back a substantial chunk, at least 20%, to basically be a mini hedge fund within the treasury company that's going to be, hedging constantly. And we expect to generate income from that. And then once a year, rebalance the winnings from that hedge fund, from the hedging into the treasury. So it becomes more self-funding. I think we will still do raises over time, but we will dilute far less than
Well, I mean, normally those raises are accurate. Like if you look at what Bitmine, if they're done at a premium, like the strategy model, you kind of get see
right.
that flow into the stock. Although, like you could argue that that model is dead completely now, because I think even strategies sort of at a NAV of one.
Well, I think the question will be like, okay, who deserves a premium to MNAV? And in my view, it's going to be a Gen 2 treasury company like EMJX that is, hedging, that is retaining value of the treasury over time during the drawdowns, that is generating income that becomes able to be turned into more coins over time in the treasury, that is multi asset. And or should it be a treasury like that, or should it be a Gen 1 treasury where they're just floating on the water with the price of Bitcoin rising and falling? And I mean, I think it's pretty obvious. Like, I think our approach deserves a premium. If anyone's going to trade at a premium, I think it should be us.
How is it going to sort of, if you can give more details already, like how is it going to run? What's going to be the sort of the size of the initial launch start of the of this treasury?
I
What?
mean, we're probably going to start small. So I don't know, 50 million or something like this. So it's going to trade though in the US on one of the major exchanges. And hopefully, fingers crossed, we'll have some like big, investors, initial investors, like giving it sort of their seal of approval from the beginning. But then people will, either agree or not, and they'll have a chance to buy in. And there are going to be some people that will say, "Oh well, like I'll wait and see," and I want to see that Eric can really hedge during the down times. I want to see like, real track record, and not just like him talking about a back
So
testing.
how are you actually, because it's interesting. There's not really any other treasury that are being actively traded. Kind of Zilla that you mentioned that I still have a lot of shares. I don't know if you follow that, but that story is sort of crazy. Everything was lining up there. Then management issued sort of 15% of shares to pay themselves. Management fees diluted everyone's net asset value by like 15%. Well, now it's still unbelievably underpriced, and I bought it cheap. But like there are people who are absolutely livid across large shareholders, and you had all of those items like Phil is an investor still, and a lot of those big names in crypto as well. And yeah, so you're kind of never protected from that, even though like me and some other large shareholders are trying to fix it now. And I think we probably will end up with finding a solution there. It doesn't, all of that doesn't really shine a great light off of the treasury space at the moment. You have Bitmine, which is kind of impossible to figure out their NAV, because you never know the other amount of shares. Sharplink that's trading at a discount for God knows how long and is not doing any buybacks. That's also probably one of the, because everyone assumed that you would kind of get the volatility both ways, growing your NAV, and then they kind of diluted as it went up, and they didn't do buybacks as it went down. Well, they didn't do enough buybacks, probably with the exception of Ivzilla before all of this sort of mistake that I hope will get fixed and that we're trying to get fixed at the moment. But it's interesting how that translates to an actively traded one, because I guess people wouldn't know exactly what are maybe you wouldn't even know the if you don't do a mark to market sort of day to day.
Well, I think that time will tell, and people will. I think that the three differentiators for us are like multi-asset, and then the fact that we were using AI models, and then I'd say the last differentiator is just me myself. Like, and so why does that matter? So like multi-asset, like we're bullish on Bitcoin and Ethereum. The back test shows like we generate better results when we operate both rather than make a single choice to only be a Bitcoin miner or treasury or only be an Ethereum. I think it's like for some reason, like human beings have said, well, just because like it's always been this way, we can only have a treasury company that is only Solana, only Ethereum, only Bitcoin. Like why? What, So I think we're, and now we'll go out and either we'll be successful or not. And then people will say, oh yeah, like that makes sense. Why aren't we doing that already? And then we're saying like we have better AI models and that's going to hedge and have lower drawdowns. And some people say, okay, sounds great. And some people will say, well, I'll wait and see how you do over the first 6 months. And we'll either be successful or not.
So how would a hedge work just for people that don't understand, like it, if you're doing like multi-coins?
We're going to sell puts and calls against probably IBIT and ETHA on the or we might use Deribit
Okay.
direct. So basically against the sort of the value of our treasury. So we have a model that we've built for both for Bitcoin and Ethereum that sort of tells us on a go forward basis, a look forward basis, do you expect the price to be, where do you expect the price to be, in several weeks and months out? And then based on those signals, we'll sell calls or sell puts against it and generate the income from that. Or if we're wrong, obviously we're on the hook to kind
Yeah,
of pay
there
out.
is a trade that's been going for a while, and I'm not sure why no treasury was doing it. It kind of got arbitraged out recently that when people were buying sort of spot IBIT or ETA and then selling futures like for a year at higher rates and kind of collecting sort of like 10%, 11% API. You had it like with Bitcoin, Ethereum, Solana, now it kind of got arbitraged out already. But I guess I'm curious. So you would hedge like against the main cryptos and hold mainly altcoins. That's how it
Well,
works.
of course. Uh, so no, we're not going to be totally hedged against Bitcoin. Like we expect to be predominantly a Bitcoin and Ethereum treasury, like building that over time, buying more Bitcoin, buying more Ethereum. So we do have a bullish
Okay.
longer term view, both on
Okay.
the price of Bitcoin and Ethereum. But then for 5 to 10% of the treasury, we expect to play around in the whole altcoin space and find ones that we believe are significantly undervalued or underappreciated. And there's a lot of skepticism, in the TradFi world with anything that's sort of beyond Bitcoin and Ethereum. And people say, oh, it's all scams and crypto's terrible, and you have fart coin and all this kind of non-serious stuff. And that's true. I mean, there are a lot of scam coins
Well, I
out
mean,
there.
there's real stuff like there's Hyperliquid, there's Ton,
Sure.
there
Yeah, and
are
so
real
that like
projects.
that's like what we're trying to put on offer in the window to investors is that like you should invest with us in EMJX because you're not going to find some of these like undervalued coins like just like very few people found Carvana 2 years ago and so trust us and we're not always going to be right. But if we are right a couple of times, if 5 to 10% of the portfolio is invested in those coins at 100x, then that's going to have a major positive impact on the value of the overall treasury. And um, so that's and like in terms of me being the face of it, I mean, I was really amazed at if you'd asked me in June, like which is going to be more successful, SBET or um, BMNR? One with
Yeah,
Joe.
that was absolutely a surprise. I was an investor in SBET, and then I sold when it's kind of got disconnected from the premium. And I would have never thought that Bitmine did the way it did. Like,
I think what's interesting though is like obviously like and BMNR has come down now with the rest of the market, but I mean it's still I don't
do
know
you
what
think
they have.
it's over for
I know
Bitmine
I don't think it's
and
well
that model?
I think people love Tom Lee. They trust him. They
Yeah,
like
no, that's absolutely true. But I mean, at the end of the day, like right now, SharpLink is sort of trading at what, like at a discount to NAV. But the only question that why it's not going back to NAV is because they're not taking the step to do buybacks. Bitmine is sort of overvalued by every standard. Like they're not
right.
staking, they don't have any revenue, they just have more Ethereum, but that kind of even complicates the question of how to actually get yield on it. It doesn't
And
simplify it.
I guess that makes the point, Dimitri, of like, like does Elon deserve a premium? Does Alex Karp deserve the premium? Deserve. It's a
Yeah.
moral word, right? And like we can be moralistic or we can just say like, well, whatever it is, like there's a trust factor that the stock investors are willing to hand over to Elon and to Alex Karp and to Tom Lee.
Yeah, and, absolutely. We're looking
So
at it playing out in the opposite way in Itzilla. At right
yes,
now.
yes, yeah, that's
It's
right. So
exactly what's happening.
that's right. So I think what I hope for anyway is that I'm able to be a mini version of Tom Lee, and that people say like, oh, I like Eric because he's authentic and he's real, and I trust him and this and that. And obviously you have to work to continue to earn that trust. I mean, you everybody has a positive view of you from Beyond Meat, but you're only as good as your next idea,
Yeah.
right? You
Oh,
have
yeah,
to
no,
keep.
absolutely. Like if I hadn't done the Itzilla investment publicly, I would have cared that much about fixing Itzilla now as I do now because
Right. Right.
now I know that like this is just something they got wrong. There's very simple fixes and they need to do it, and like
Mhm.
hopefully they will. But at any point, like this is going to work out in any way with at least fixing Exilla. We'll see the price of Ethereum, but this I'm sure will be done between me and sort of other large holders. But yeah, no, I agree with you that it's not simple. Like I doubt that there's a lot of people who would like to, because it's nice when things are going up and you're kind of get happy when things are flat or they're going down and you're getting death threats as you mentioned or all those messages. Like I don't know that ever anyone could actually handle that every day to day.
No, I mean, I don't know if you get those too, but like
Oh
it's
yeah, no,
definitely
I do. There's a lot of very creative messages sometimes, and I always find that it's mostly the people who like invested like $300 or something like that that are being extremely
well,
vocal.
yeah. Yeah, but what's crazy now is like you just never know. Like at the end of the day, like you can sort of say, "Oh, this is just some crazy person on Twitter," but you
You
never
never
know.
know. You absolutely never know. Like, there's
But
several times I tweeted the suicide hotline number, just in case.
yeah, well, I just think I sort of feel like now I've passed the point of no return. I guess it's the same for you, where like I've chosen this life to kind of have my name out there and to be public, and so now I got to walk this road, and just try to do it as best I
Did
can.
you hesitate to do it? Because for me, like especially since my account wasn't public in the beginning, like for a couple of days I was thinking like do I just leave like an image of a capybara? And actually it was a very narrow vote in the beginning. There was a poll on X, like do you want to actually see me or a live agent of a capybara speaking to them? And the AI capybara lost by 1%. So it was
Really?
very close.
Did I hesitate? No, not really, because I mean, I was kind of like in a situation where like I had nothing to lose. Like I've told this story a couple times where like a couple of years ago, like my hedge fund that I have now that I run, like I got started like 10 years ago because I knew this guy who was like a billionaire, and he like gave me a chunk of money to manage for him, and like he sort of gave me a start. And I was kind of lazy. I didn't do a good job of like marketing and finding other investors. And then I just sort of like always thought like, well, he's a friend of mine. He's just always going to be here. Like sort of made me lazy,
Yeah.
and like the guys I criticized for like staying private for too long. And so then I had a bad, I had good years, and then I had a bad 21 and a bad 22, and he pulled his money out. And at the end of 22. And so I was like, oh my gosh, like what am I going to do? I got 4 kids and all this and that. And like, I had like all these like, crazy like Cayman's directors and like lawyers like saying, oh, you well, just close your fund. You're never going to be able to raise any money now because you've had these like 2 bad years, and you just open up in 6 months again and like pretend like it never happened and all this kind of stuff. And so, like I didn't want to do that, and I was like building these like this little team like to build AI models. So like when I decided earlier this year, like okay, I'm gonna go for 100 baggers. I'm gonna try to find the next Carvanas and all that. I just was sort of like like I'm in my 50s, like what the hell kind of like was my attitude. Like I'd gone through this like terrible like career, few years, and like it was tough on me personally and my family. And I was just like, and you like all these people that you think are your friends, like they go away and like turn their backs on you, and like they treat you like you're a different person because you're going through tough times and stuff like that. And so I was just like, okay, whatever. I'm just like gonna go for it now. Like, I got nothing to lose. Like, and if I end up in the ditch, whatever, I'm just gonna go for it. So like that's sort of like fed me, and I just I never had second thoughts about going public with the open door stuff. It was just more of just answering, dealing with whatever the fallout was. Like, I also like I got so many people like telling me along the way, oh, don't do this about open door, or like I was criticizing the CEO of Open Door. It was kind of like your ETHZilla story. Like
Yeah.
I sort of realized like 3 weeks after I went public with Open Door, they had their first earnings call. And the woman who was the CEO was just terrible. She was like awful. It was like the worst earnings call I'd ever heard. And it was like obvious to me anyway that she had to go. And like there was just no question. And so I started like saying that publicly, like, okay, enough is enough. Like, let's get her out. Like, and try to rally support. And I had so many people saying, Eric, you're going to tank the stock price. Stop saying this. Like, you're going to make the stock go from $2 to $1. And I was like, you guys can do whatever you want. It's free world. Like, you tweet whatever you want if you think she's great. But I know she's terrible. And maybe I'm wrong, but I'm just gonna I'm gonna say what I think and like keep going. And but all along the way, like there were so many other things. Like I would say this, like, oh, it's gonna tank the stock price, and like, oh, Keith Rabois is saying this. Oh, you got to tell Keith to stop saying this. 'Cause he's gonna tank the stock. Every time, like,
Yeah, well, people saying that is mostly because they care about getting out in the next 10 minutes or like
right, right, right.
making a quick flip. It
So,
definitely the only thing you can do is say the right thing. After that, like over time, like the fluctuations don't change. But you're true. It's right. It's close to what's happening with Fusels now because like I have a feeling I worked there for the past 4 days. It's to try and actually fix this. Like I have no relation. I have no even inside knowledge other than reading at all of that. But between sort of all of the large pollers going now, like it is getting close to like 50% of the voting shares. And and management, what they're doing, like maybe they're just a bit in denial. I don't know, but this is going to catch up to them soon anyway. We're kind of in the very middle of it now to sort of find a fix. So I don't want to be too public about it yet, but like come next week, we'll either fix it or we'll fix it another way. Like that's
well, people have said to me, like, oh, are you gonna try to like find more stocks where you can like replace the CEO? And I was like, I would much rather not have to
yeah,
go through this. Like, it's
yeah,
much easier just to
it's
sit
true. Like
back and
it's a last resort of things like that you actually need to do. Like it's not something that's great to actually be doing that. Hopefully, like you want to find like and I still think like here that they can do the right thing because they made one mistake, but like they need to recognize it was a mistake. Like in this case,
yeah,
like, it's
that's
obvious. Like imagine
and
you open your digital asset treasury, you raise 100 million, and then you say, "I did a good work. Let me pay myself 20 million." That
right.
was
Yeah.
nice.
Yeah, no, I mean I
And
mean
then
there's
you
a
can
reason.
close your digital asset treasury probably like
I
that's
mean, there's a reason why a lot of these stocks that we find are so cheap.
yeah,
Because
yeah, that definitely like it, you do need to understand the risk and indicate I guess the common theme is that in all of those stocks that kind of go for this moment of like large retail community, if you look at the business itself, it's almost always better off than it was before. Because in Beyond Meat's case, I think they've raised for like ATM, so something like 200 million when they had 100 million in cash. Like open door changed like probably forever. GameStop changed forever. There's kind of some of them that die, but
what's your view? I always get asked like, "Oh, is this a sign like retail is, things are different now. The retail investor is here. They're making a difference. They're going to be a new force in on Wall Street." What do you think?
I think that retail has always decided sort of things without probably realizing it. Because before that, you kind of saw the rise of ETFs and exchange traded funds, which are a lot like of people in retail going into it. Right now, I think that the main difference that's happening is that social media has allowed sort of retail to come together across a specific stock whenever there is a good storytelling idea against the stock. And it almost seems not to matter what the story is as long as there is one, because you kind of have this vast ocean of stocks for the vast majority. There's nothing behind it. There's no people associated with it. There's no real reason. There's no real thesis. It's kind of numbers jumping on a screen. And then from time to time, you get those stories when there's like people behind the company that actually explain it, that spend a lot of time, and it kind of, I think, rallies. Like if you look at reality TV, for example, right? And and all of those people watch it in mass. There's no information there. There's no story there. It's just people talking. And yet people do watch it. And I think it kind of translates here. Like there's this concept that I think is growing, that a stock can actually have a brand, which before sort of didn't exist. Like before, like you had a security, funds were trading it. It doesn't matter. It didn't matter if like people were, if there was a sort of attention associated to a ticker. And now, ever since GameStop, this has changed. Like all of those tickers, like Beyond Meat before was a different company at like 50 cents a dollar, and before all of this happening than it will be now for a long future. And it's the same for Open Door. It's the same for all of those businesses that got caught up in it. And there's really often one spark that lights to it. But it is, I think, about the content. Because if you think about it, like companies can't actually do what we do. Like even if you take the CEO who knows exactly the stuff he needs to say, or the board, they can't come out and actively advertise their thesis on why they think it's a good investment. They're not able to say why this is actually a good investment. They can't speculate. They can't give projections outside of guidance. There's a lot of things that they're not able to do. And so I think that's why sort of where we've appeared from, right? Like because if they were able to do that, like there would be no interest in listening to you or to me or to any of those guys, or because like you would just find it online. But it is surprising that in the vast landscape that is the internet, there's actually so few people that are able to give factual information. Like
Yeah.
you even see management and companies take advantage of hype. So I think it's a psychological thing, because I actually don't think like if a random person like were put in your shoes, for example, and like they're up 10x on a stock. They're getting death threats. They're thinking like, oh, I'm going to this, I'm going to do that. Like greed is such an important driver for people that not a lot of people are able to extract themselves from it, I think, to actually do this.
Yeah, I like my reaction to what you just said is that I talk about something called narrative capital, or the power of narrative. Like there's sort of like information advantage, which is like what Gordon Gekko in Wall Street was like asking the Charlie Sheen character to go out and find me basically inside information. Then there's like analytical advantage, like who can be a better spreadsheet jockey and kind of figure out that this company is more undervalued than that company. And then there's like narrative advantage, where it's sort of like telling the story. And so that, I mean, it could be Elon telling the story, or it could be guys like you and me on the outside telling the story. But and sometimes I think some stories are more interesting than others. And like I would say, like, something about the Open Door story was there were like many chapters to it, or
Yeah, I think
subs.
what it is, I agree with you that it's around the narrative, and that sort of people who are able to explain this narrative are sort of and you can see in almost all instances, in mine and yours and all of those that were before, it kind of comes out of the blue. It's not someone that a lot of people were reading about. It's kind of the story that comes up first, not the person. And
Right,
like half the people, at least you, it's in your name. Like for me, like I think 95% of people think I'm an actual capybara, or like it's
right.
and and,
But like
and
the game, but I was always curious. Like I think GameStop was, became inextricably linked with Roaring Kitty, and but then I never understood like why did all of a sudden AMC become popular and become a meme stock, or why, and then BlackBerry was a meme stock. I like who made that decision? Like was there like one guy originally on Reddit who called it out, and then it
I
seemed like
think
the
just that
masses.
at some point, if you have volume spiking, then like everyone, it shows up on everyone's radar. Like people start buying, selling,
Right.
and it kind of blows up. And I think those are mostly random that follow overs. And by the way, those cases, like in the case of those stocks, like nothing really happened. Like today, I don't think that anyone cares about those companies.
Right.
Like GameStop has a cult following up and door. Like,
But then the challenge then is like, look at ETHZilla or look at Beyond Meat, right? Like again, like I'm not an expert on either one of them, but like, Beyond Meat obviously went up and then it's come back. And now the narrative challenge is how do you get people to care about it again? How do you get people to kind of see whatever is possible like from here, from
I
above?
think that the main part that a lot of those people miss is that sort of whenever like similarly to you, I bought Beyond Meat at like 80 cents, I think 85 was my average. And
Mhm.
like the narrative was a long-term one of this actually working. And then what everyone knows it about is about a sort of short-term spike that happened very quickly because everyone believed that narrative. And that narrative was never
Yeah.
about 5 days. It was about the long term of what they can do. And now they actually have 3 times the cash than they had before to actually go and do it. So the odds of it happening are faster. But I think that people are expecting quick results so fast, then they're kind of looking. I think like if you zoom out like in a year or you play or you listen to this podcast like in a year and a half, 2 years, like you're going to look that Beyond was sort of at around $1 or less, and it's going to be higher. Like for Beyond Meat, I don't know if this was the case for Open Door, but uh, you could actually sell options for like 70% of your share price for a call option at like above your purchase price for 3 months.
Mhm.
So, so essentially you're paying 30 cents for your share.
Mhm.
And it kind of turned into a gambling casino more than anything else. So that's kind of what you see now, kind of. And I don't think that you
Well, yeah.
necessarily need to get people to care about it immediately. Like if you were like on the initial thesis for Beyond Meat and you were looking at the initial reasoning for it to go up. Like sort of everything has improved. They have more cash, they have more visibility. The forward dilution that they will have on the convert has gone down by 2x. It was like 97 cents, now it's like close to $2. A lot of good things happen for the business. Now it's up to them to be able to actually deliver with all of those positive
Right.
outcomes that they can use. And I think not all management teams can actually do that. But for them, it's a second breath of life. And like if you believed in it before at 50 cents, like now everything is lining up for it to actually work better. The the question is like that's not what a lot of the noise is about. A lot of the noise is
Right.
people kind of looking, will this go like 3x in 2 days? Or like where am I better off placing a blackjack bet? And it's not the same. And I think that in your case and in mine and all of those investments, like you have all of the people who buy in with long-term or mid-term vision, and I've noticed, I don't know if it's the same for you, but those people typically tend to have like larger, more thought out investments. And then there's a lot of people that piggyback off of this that put up like $500, $1,000, and they think like, oh, maybe this will go like $200 more in the next 5 days. And they kind of distract almost people from the actual thesis. And I'd be curious to run the analysis, but I think that if you probably buy a stock with a strong narrative like that, after it actually went down, your returns might actually be better than if you buy at the initial point historically.
Sure. Yeah. Yeah. I mean, they've been de-risked somewhat,
Yeah, yeah, the
like,
risk is lower definitely than in the beginning, for
yeah,
sure.
no, I think, it's interesting because I think everything layers upon itself. Like, I think one of the things that helped me and helped Open Door initially kind of take off in mid-July was um, I could say credibly that I was the guy who saw Carvana early. And so I think I don't know, I have no way of measuring this, but I think some people sort of, I mean, I would get tweets saying like, "Oh, you're the guy who found Carvana, so therefore I trust you, like that open door is going to take off." But, um and then it got like it traded 2 billion shares like 10 days later, and which I thought was like incredible, like 3x the float in one day. Probably if that hadn't happened, like I don't know if Beyond would have traded 10x the float, like whenever that was, like 2 months later or something. Like one success builds on the, if you can call it that, one success sort of builds on the other. Like I do think you're right. Like probably like everybody just sort of seizes on like some new name, like oh this Beyond, it's the new open door. Okay, let's all pile into Beyond, and probably a month from now it's going to be something else that people pile onto. Um, Now that for the short term, and then what actually works in the long term, that's another question. But everything kind of fits, into each in
But
on.
I definitely think that you're right that there is a space in the market for actually narrative to be given around the stock and storytelling around the stock and companies there's are very limited to what they actually can do in those and I think that if you look at any stock that has sort of a story around it, its performance stock price wise is almost always better than it is without. Like
Yeah, for
it
sure.
completely underperforms. Then it is a question of what the company actually does with it. Like, for example, in Upward Door
Yeah.
case, like if they hadn't changed the CEO, it probably wouldn't be where it is now.
No, I mean though I mean I told the guys on the board before that terrible August earnings call. I said you got to do a video call. You got to take questions from retail. Don't make it audio only, because you come across like you're hiding, and you're like trying to get it done as soon as possible. Because it's an obligation that you have to meet as a public company. And whether the director didn't pass it along or the CEO ignored me, she did the opposite. I think it was like a 20-minute audio only call from start to finish, and most of it was like prepared remarks and stuff like this, and or legal boilerplate. And like you could tell, like that woman, she had no ability, no ability to, if we had a conversation with, hey, what's your narrative? I mean, come on. I mean, like she'd have no ability to
I
craft a
think that
story,
there's also
tell it.
that when you're kind of working at a company and you get confronted by a movement of retail around the narrative, there's a lot of people who always tend to disregard it and think like, ah, this is going to go away. This is not that large. But like, for example, for EveZilla, if you look up like all of retail combined with large holders, I think it's like a quarter of the company by now. And
Mhm.
like it is material and people do tend to downplay it very similarly to what you're saying with your call of the previous Open Door CEO. Like I did that this week and it was like similar to what you're saying.
Well, yeah, now I'm getting calls. I don't know if you get this. I'm getting calls from CEOs of like some random public company that like his stock is down like 90% from where it was like 5 years
Yeah,
ago.
like
Like,
you should explain why you should buy
hey,
this. Yeah.
yeah, can I hire you as a consultant to tell me
Yeah.
how
Yeah.
to, construct a narrative or something like this, like
Yeah, yeah,
so I
no,
I think
it absolutely, but I think there is a strong demand for it. Like I think that there's probably few people for some reason, I don't know why it is, that can kind of have those moments. It is very strange how it happens, I have to say. Like I wouldn't have expected for this to happen around Beyond Meat for sure. Like
Well, well, and also, one thing that irritates me is like this happens sometimes on business television. Like everybody called Open Door meme stock, and I tried to like I tried to correct them and say, no, I actually think it's a cult stock, because a cult stock is like something like Palantir and Tesla, like from like 10 years ago, where like there's a debate about it, but like it's a real business. And there's something that the mainstream Wall Street folks are missing. And retail sees it first, and they will be ultimately proven right over time. That's what makes a cult stock, and in my
yeah,
mind, versus a meme stock is sort of like a shooting star,
yeah.
and then it's gone and stuff. And so, but like I noticed that in the business media, like there's still the knee jerk is like to explain all of the anything retail is sort of like it's a meme stock. Retail is dumb. Retail is shooting itself in the foot again. Oh, like, can you believe it? They're at it again. They piled into Beyond Meat. They're gonna lose their shirts. We're smart. They're dumb. Like there's this and they all and like I noticed like even in some of the articles that got written about Open Door. Like they wouldn't even mention me. They would sort of like mention that like, oh, this army just sort of materialized out of thin air and they vaulted this company to so I'm probably biased, obviously, being being in the middle of this and kind of being there at the beginning. But I do truly think that the media maybe it's that they don't understand the narrative aspect. That's one part of it, but it's also there's a leadership aspect to it where the leaders somebody has to start this story or this journey somewhere. And they have to persist and they have to take the death threats and they have to kind of keep going.
Yeah,
And
I mean, I think that's exactly the point. Like you actually need to have sort of something to even publicly state your position, because a lot
right.
of people won't do that.
Right. And so, we'll see like where things go from here and like whether there will be a few, other capybaras that come out and start the next movement for the next stock. Or whether it will just like be like an AMC where just like some rando on Reddit, mentions a stock and then all of a sudden like, that stock trades 20x its float in one day probably will be the next one. We'll see. But I suspect like it's going to take a leader somewhere. It's going to take a narrative, and for it to
I
have
think it already always has sort of the same components. It's like a good film or a good story. Like you
yeah,
need to kind of have like the community. Every one of those stories has a villain. Like
right,
if in Beyond Meat, like you had the short sellers who had to be like proven wrong and destroyed. Like in Open Door, you kind of have the real estate agents that no one likes, and it's like people that
well, yeah.
really.
There's this guy who wrote a book or a bunch of books called Joseph Campbell. He's this American guy. Like I think talks about the hero's journey. And he sort of
Yeah.
wrote about like archetypes and like how all through human history, like good versus evil, there's certain themes. It doesn't matter whether it was the Aztecs in Mexico or the Russians, 500 years ago, or whatever, Native Americans or whatever. Like humans are hardwired for stories and certain stories again and again. And George Lucas apparently like he read like all these Joseph Campbell books before he wrote Star Wars, and then he specifically wrote it, thinking of those archetypes and like Luke
Yeah.
Skywalker, Darth Vader, and all this father,
It's
son,
absolutely it.
and
Every popular story has
so
it. And it kind of
and
has to
so
go through hardship and like David versus Goliath. It's a very common theme that resonates with everyone. I think it just gives people hope, like that they can actually
right,
do
right,
something.
and
It's
so
like the
we can
lottery,
be
like
NBA,
everyone plays. Like when you buy a ticket, you know
right,
you'll lose. People do it anyway.
right. Right. But I think like in business or in stock investing, like we think like, oh, well, what does that matter? That's just, silly. But it's, these are all examples of how those basic human needs can manifest themselves here, in this retail context or in these particular stocks. If you kind of, I guess, appreciate them and try to whatever use those whenever you can to your advantage.
But it's interesting how retail and like institutions like think differently because when I bought the first shares like in Beyond Meat and I kind of made the first post before it kind of blew up, there a few people I know like my main business is in real estate development and some people just we do deals with I told them I bought those things like I can tell you they all laughed like they
Right.
all laughed outright almost like this is so stupid like they thought it was a joke for
Well,
2 days.
there's this guy who's on the board of directors for Open Door, Adam Bain. He used to be like the head of sales for Twitter. He's been on the Open Door board for a bunch of years, and he follows me on Twitter. So the day, or either the day of or the next day, when I like came out with my thesis for Open Door to $82, Like he highlighted it, DM'd me like, "Are you serious?" Like he laughing emoji. Like this guy on the board couldn't envision an open door one day that could be an $82 stock. He thought, I mean, I had other people saying like, "I thought your account got hacked," and that like like it was like so crazy. Like so, it's I don't know. It's interesting that people can lack imagination sometimes.
Maybe that's what it takes, imagination.
Yeah.
Interesting. Well, look, I mean, like, yeah, I think that everyone will follow your that very closely, or like your crypto hedge fund. I actually think it's going to be very interesting what's going to happen with that and where it's going to go. I'm going to be very curious whenever I'm done dealing with all those things with EveZilla and actually fixing that, then before moving on to something else.
Yeah, good luck with that.
It's absolutely like it's insane. Like I actually like I wonder like what do you think retail should do? Like having done that before, sort of when you're sort of met with well, I think that this will get resolved quite easily, but when you're met sort of with disgruntled or even like slightly hostile on a mistake uh, from a management standpoint in the company, what do you think actually retail should do?
Well, I think you can't be put off. I guess you can always sell your shares. I mean, it's going to be a long, hard road if you face these like, I think everybody's default is just to kind of disregard and kind of or put down retail. Like I spent 10, I mean, we didn't talk about this, but I spent 10 years from like 2007 until 2017 trying to get Yahoo to change as a company. And I don't know why I kept going back to it again and again. And like they were just like the perfect example of it. Idiot board, idiot management teams, one bad CEO after the next, culminating in the one of the worst CEOs like ever, this Marissa Mayer,
Yeah.
who drove the company into the ground and then sold it to a telephone company. So bad. And but the all along the way, when I was like this like retail shareholder on the outside, like they would just portray me as short-term thinker. You don't understand our business. We do. You're just like a novice. You're passing through. We're
Don't you think that every time people tell you you don't understand and don't actually say why, it's always kind of like just to brush people off?
Yeah. Or the other thing they had was we have a plan. We just need time to execute our plan. Thank you very much. Which again, like they got 10 years and they drove the company into the ground. And so
I
you
think
know,
that's just, the NPC response to like, you don't understand anything, so everything you say makes no sense. Then you think too short term, like in the long run, when inflation catches up, we'll break even.
mhm.
And yeah, and then we have a plan, but we won't tell you because like disclosure, we're not allowed to.
Oh yeah, sure. So yeah, I mean, I think like when you face those kinds of challenges, like you can either give up, sell your
Well,
shares, and
I think like
or you can
in their
push.
defense, like it takes humility for people on the inside to actually listen to people on the outside. I don't think that
Oh yeah.
I don't think anyone can actually do that. That because in many deals we have that even not on public companies, but on real estate deals, like half of the time it's the ego of the guy that goes in the way that he just like for a very stupid reason goes and loses money. And like I can tell you like a short story about when we were buying out the last three apartment units in a building that we were tearing down. And there were three guys left, each with 20 square meters. And we were meeting first with the first guy that we wanted to pay him 150,000. We were paying him 300,000. And I told him we'll give you 325,000 if you don't tell the two other ones for 1 hour how much you made. And I said like he looked and he said, I'll take 300,000, but I'm tweeting it right now, like immediately. I don't know, maybe it's kind of the same thing. Kind of takes ego. But look, I mean, it's. obviously been very interesting. I think that everyone will follow your crypto treasury with great kind of interest, and I will for sure as well. And
Yeah.
hopefully, I'm
Well,
done with Fibzilla by then, and in fixing it, that I can actually maybe take some shares in
yeah.
it as well.
Yeah, no, let me know what you think. I always love hearing people's feedback and look forward but it was great to connect with you, Dimitri, and swap notes because there aren't many people who have kind of lived through this kind of an experience. So it's a very unique experience. So it's fun to be able to compare notes on what it's been like.